Good morning, good morning. Good morning. Kalimera everyone, good morning. How's everyone? How are you doing? How y'all doing? Good morning, good morning. Good morning. Good morning from Qatar. Good morning. Greetings to Qatar. Good morning from Spain. Good morning. Salam alaikum. Good morning. Kalimera. Good morning, good morning. Good morning, good morning. I'll give you some time for the rest to come until everybody is here. How do you feel about the markets? How do you feel about Bitcoin? Let's have a little chat here. Are you getting used to it? Are you getting used to the how the market is reacting? Can you a little bit let's say you're expecting Bitcoin, so to say, are you understanding a little bit how Bitcoin is acting? We talk about Bitcoin and what they usually like to do, like as a market makers, like the markets, how the markets move. And we did give a little bit, a small touch that, they're going for the liquidity pool. And somehow you can say that you cannot predict, but at least you can say, it is the habit of the market becomes predictable, so to say. Almost, the Bitcoin's actions, somehow they're a little bit predictable. Not always 100%, but most of the times. Today's Friday, the 25th, and we spoke on Wednesday when Bitcoin was doing a little bit of consolidation and it had a little bit pushed to the down, right? And we talk about stop loss hunting, right? And we did say that, what is next most likely to do is come and take the liquidity from above. And this is what it did. That happened on Wednesday evening, what time zone? So we spoke on Wednesday morning that most likely I will expect, as predicting its habits, not predicting the market, but I'm predicting the habits. Is they're gonna go and have a small grab from the liquidity pool, and after that they came back to normal. It started from here, went up, and came back to these levels. So this is sort of like a habit being predicted. Not bad. Not surprised. Okay, someone would like to speak. I'll let them up. Let's say hi. Let's see how it's going on. let's see what is going on to the markets. Let's have a look. Yep, dominance stabilize a little bit. Yeah. Okay, cool. Have a look on that one. Let's see. From here to there, you gave 4%. Not bad. From there to there, you give another 2%. From there to there, how much did he give? Another 4 or 5%. Okay. Sand. Okay. Right. Bit boring. A little bit boring and slow. Right. How many were here? 31 people? Okay. No problem. It is what it is. You would like to have the Excel sheet. Okay, no problem. I'll post it up here for you. Risk rate size. Here it is. Here you have it. Render. Okay, we can have a look on render. Let's have a look. Render. Okay, this is render on a 4 hour. Okay, what we can see from render, just in a general idea, very quickly on the 4 hour we do like a quick overview to see how we're doing, right? And you can pull up, let's say, a trend line. This is a noise, right? Let's find horizontals. Let's have a look on the horizontals and find some horizontal levels there. Got multiple resistance levels and multiple support levels. There's one. Okay, wait, let's put an horizontal there. We have an horizontal level there, so that's an horizontal level, and let's have a look at another one there. That's another horizontal level there, right? Transit. Okay, doesn't want to duplicate, no problems. We'll put another one there. We can do that manually, can't we? There's another level there. So, you know, the first things that you want to mark is trend lines, horizontal levels. You can do small trend lines as well. I mean, let's try to put a trend line there. Doesn't have multiple touches though. There's only 1 or 2 touches, 2 points. Not the ideal situation about trend line, but hey, it's better than nothing. Let's try again. This, and we'll keep this as a noise. Buffer noise, okay. Keep that. Switch that to support. So that is our support trend line. This is our resistance line. It's fine. So right now you're sitting in between support and resistance. If I bring a Fibonacci to see if that makes any sense, will it give me any levels? Okay, it does give me a general idea that I am within the golden zone, right? This is like the golden zone. right? And let's mark that as a buy zone. And then we can remove the Fibonacci. So this is a buy zone. You are within a buy zone in render if that wants to carry on going up. Let's move to a smaller time frame to get some more definition of that price action. Have a look quickly. Okay. Well, so far, render, just to keep you a little bit, intact, we are still in a downtrend, right? And that downtrend hasn't completed yet. It is not over yet. Why? Because you haven't seen yet a reversal. And what is a reversal? A reversal is that it's going to come and give you a high, and come down, retest, and then leave. And then it will give you a higher low, right? So far, the render is giving you lower highs. Yes, this is a high, this is a lower high, and maybe it's going to push down. And maybe at this point, you're going to see the start of the reversal, maybe, right? Why is that? That will be that you have this, let's say, small consolidation. It's trying to push to the up now. And what do you want? You want to make sure that you get a high low, and obviously you need a high to break the previous highs, right? So on the last wave, this is a wave up, this is a wave down, and this is a wave up. That will be another wave down, and maybe it will give you a new high. So as long as you're getting lower highs, it's a sign that it continues to the downside. The only good sign is that maybe you're going to have a higher low, but it's not formed yet. It looks like it's going to happen, right? So that low, ideally you want to be higher, right? You don't want to see the price coming down this way. If you're going to see the price going to come to this level, which is a support there, then you have what? A low high and a low low, right? So there's no sign of reversal yet. That is for leverage, yeah, midterm, short-term trades. Now, if you want to go and talk about, let's say, like long-term trade, wait for the price to come down to this support, which happens to be on your trend line and horizontal, and buy some position here for the spot. If it wants to come down and retest that horizontal, when and if it's going to come to these levels, you can buy some more. Then you can DCA, right? And you wait for the moment when the price will come back. Now, this is how you do the TA independently. Like, you're looking at render only a low. But if you come back to Bitcoin and say, okay, what Bitcoin is doing, right? We know that we lost the first trend line. We lost a nice major order block there. It came down and it's acting like a resistance, right? So you need to keep in mind that you have Bitcoin affecting the rest of the market. So the crypto market, not the full market, but the crypto market. And then you question yourself, like, okay, what Bitcoin is more likely to do? After that it clear the liquidity, most likely it will try to come down to this level because I have a huge order block there. And then I will expect, because of that order block, I will expect some resistance. Now, if the market wants to push the price further down, right, and come down to the other target, the other buy zone that I have here, obviously you do understand that render, it's very difficult to do something, to do something like opposite. So it's less unlikely for render to go up when Bitcoin is going to go down. Yeah, it's very hard for something to happen. So if Bitcoin is going to go down, maybe, right, we need to investigate, so to say, search for other levels of render, and maybe we'll have another horizontal around there. So maybe if Bitcoin is going to go down, maybe you're going to see render follow Bitcoin and try to do a price discovery on the different levels. Right, so don't rush about render and wait for, so to say, a confirmation what Bitcoin is going to do. Right, don't rush, don't panic now. We need to see what Bitcoin is going to do. Yeah, that will be my approach of it. I mean, render is looking good. You know, it's approaching. It is within the gold zone. It is within my buy zone. That is good. But yet, I'm not going to go full in, right? Because it's not so clear what is going to happen with Bitcoin. So give it some time until we have a trend. You need to have a direction. Right now it's a little bit like sideways. It goes up, touches the trend line, comes down, you know, touches the support. Always it's a very good idea for you, you know, to build up your positions, even on leverage. Always make sure that you buy on a major support. And when you have confluences of things like I have a trend line when it's meeting an horizontal, that's a very strong level. Then you have another horizontal there, right, which is, you know, another touch there. Maybe it wants to come down. Again, it is safe. Why? Because it is within my my trend line, right, in my buffer. Yeah, the noise cancellation zone, right? So you don't worry. You can buy some positions, but don't go full in, because if it is going to lose it, then you may want to add a little bit later and give some more advantage to yourself, because you're going to update your average entry, and your entry will be looking around there, and when and if render will recover, you're going to be in profit sooner. Always trying to enter on the support levels, yeah. And also, if you can master, I mean, if you understand liquidity pool, which a lot of people, you know, now I believe they're gonna a little bit see it. It's, you know, when you see a huge reaction like this, a lot of people will jump in and say, okay, huge week, we go for recovery, and they're gonna enter for longs, and the stop losses will be looking around these levels, and that is like stop loss hunting, right? Trying to master this, trying to see where most likely the stop loss is going to be. Like stop loss is going to be there, stop loss is going to be there. Try to make sure, wait for the price to come down sharply, and try to make your entry on these levels instead of you putting your stop loss, and make sure that your stop loss is below these levels, right? Don't get caught, right? And give some space. That is your buffer zone, your entry where others are using the stop loss, and have your stop loss below these wicks, right? If more likely, you know, it is okay for a price to come back to these levels, but it's not okay if it's going to break it below, right? If it's going to break that wick and go further down, then your trade will be invalid, so you want to get out. But trying to go as, you know, as deep as possible into these levels for your entry to the upside, right? Trying to get as close to these levels as your entries, and not up here. This is what the retail do. Yeah, they see some consolidation, they go and put the entries there and stop losses below it. And what happened? The price came down and did the stop loss hunt, and then it did the opposite, exactly what with Bitcoin. You have half of the time you have traders they want to go long, and you have half of the time of the traders that they want to go short. So you have a lot of entries here as entry to the short, right? and then the stop loss has been sitting here, liquidity pool. What the market did? Hunt for this liquidity, right? So be a little bit, patient, find your horizontals, find your support and resistance. You know that it's building a flag here, a triangle. So the more it goes, the more it gets squeezed in, and then you're going to see afterwards what's going to happen. You're going to be prepared, you're going to be ready, right? Always trying to enter. If you want to go, so far you have no evidence. You don't have evidence of long. Why? Because so far, render is going down, right? So your best, let's say, bet is short, right? However, you are coming very close to the support. And so, when was the last time? The last time you came to the support, it went up, right? It came close, not really. It's not touching the support, but it came close, and you see that it's reacting, it's moving away and away. So you have two factors in play. You know that it's a downtrend, and every time you touching that trend line, that resistance, what do you want to go? You want to go short, right? You want to go short. You've got bigger legs to the down, smaller legs to the up. So you want to bet for the short. Every time you touch that, you want to go down. Every time you come here, you want to go down. Every time you come here, you want to go down, right? Every time it comes in, it goes down. Now you are in a tight spot. And said, okay, do we have a very strong support here enough to push render to the upside and have a reversal from downtrend? We're going to the uptrend. It's like a question to you now. Is it going to happen? Maybe. So it's like 50-50. Are we going up, or are we going to continue going down? And that you need to pay a little bit of attention to Bitcoin, because Bitcoin will affect the rest of them. So don't rush. You have your TA. You know what are you going to do for the up, right? You're going to build a small position as close as possible to the support. Now, if you're still feeling that, it doesn't look good, most likely, I believe that it's going to go down. Maybe you have this kind of thesis. Then your approach to this is you're going to make sure that your entry will be as close, as deep as possible into that trend line, right? And then said, okay, you know what? I'm going to bet towards the downside. Again, if you, this is like option A, option B. If you don't know, where it's going to go, because you cannot predict. We know that. We do not predict the market. It's like trying to find the, you're trying to calculate your risk. You're trying to do your TA. You're trying to see which way more likely will go, and you're trying to catch that wave, right? Now, if it's a little bit confusing and you don't say, oh my God, it is not clear to me, I don't know what I'm going to do, then you go for a different approach. I said, listen, you know what? Let the price prove to me, give some, evidence what you want to do. So you'll wait for either break. You don't care. This is like plan A, and this is plan B. And say, okay, you know what? I'm going to be patient waiting for the price to break a trend line, a resistance or a support, and then you wait for the retest. You make sure that you don't get below you don't get below that trend line, and when it's going to pull away, you say, okay, now I've got some evidence, and I'll go for long. Or plan B, it comes back, retest, and then it wants to go down, and then will be your entry for short. And that you minimize your risk even more. And said, now I'm not trying to guess, I'm trying to react to the market after some evidence. You can do this, right? Now, in the case that you have a fake out and when it's going to come down like this, right? You're going to wait what it's going to do, because you are very in a tight spot right now. You're going to wait. If that was a fake out, it's going to come down. Is it going to respect the support trend line, or is it going to come under the support trend line and then come back, retest it, and then continue. That will be one move. Or it will give you another fake out, another liquidity grab, and then we'll come back and do funny things like this. All scenarios are possible. Now, as long as you understand what are the possibilities, either it's going to go up and break, either it's going to go down and break. That's one possibility. Another possibility is a fake out, right? Or it's going to fake out to the top or to the bottom, or another fake out and then come back. You can do multiple things. So okay, I know what the possibilities are. How do I minimize my risk and not getting wrecked or getting stopped out too often? Then we say, you know what, I'm going to be more stricter on my entries. I'll make sure that I don't have so many stop losses been hitting on me. So I'll wait for evidence. So let it come out, retest, make sure that it doesn't fall a certain level, right? And then say, you know what, I feel more confident. I minimize my risk. I'll go entry here, and maybe my stop loss is going to be under that level, or maybe your stop loss is going to be under these levels, right? Because it can come down and retest again. Sometimes it doesn't go flat line up. Yes, it doesn't go in a straight line up. Never does. Now, a general idea of Bitcoin, a thesis: we are still bullish for Bitcoin. Right? It doesn't matter if you have a small leg as a downtrend. We know that, it's clear. But the general idea, the general thesis of Bitcoin, we're going up since the beginning of this year. Right? This is a big leg. So we expect another small leg to the down, which is a correction, and then you will expect another leg to the up. And that still is a bullish wave. It's a bullish, a bullish setup. You're only going to be bearish only if it's going to lose that trend line, right? This is the structure, the outside structure, and this is the inside structure. Let's give you a different color. So yellow is the outside structure, the big waves, and the green is the inner structure. Yes, in a big leg to the up, on the different time frames, you have up and downs waves. So this is the simplest thing for you to do your TA and you understand the market, and don't panic. You don't need to panic. What I do expect, maybe he wants to come and retest this trend line from the 15k. I mean, I have this trend line all the way back from 2009, right? So this trend line has been, retested multiple times, right? So I feel a little bit good about this trend line. I said, okay, it came and retested when we touched the 15k. Maybe it's time again to retest that trend line. So if it's, there's a lot of space, let's say if there's a lot of space for Bitcoin to go down, the same thing will happen to the alts, right? So don't panic. Don't panic. There are plenty of trades out there. Now, if you want to prepare yourself for the long run, or spot positions, because you don't know if Bitcoin come down to these order blocks and move, buy some key, some on a key level, buy some position, get yourself into. If you want to go further down, don't panic. See this as an opportunity to average your entry, and it's going to come further down, and then you're going to be good to go. The reason I say this is for you, because you don't know if it's going to push away soon enough. So don't have that mentality to say, oh, you know what, it broke that trend line, 100% is going to go down here. Why do I need to buy here when I can buy cheaper? And then Bitcoin never comes to these levels, and then start turning around, and you find yourself being in these levels and you haven't entered to these levels. So, for you to be a good and a smart investor, trying to find where are the key levels are. So, I see some horizontals. Again, draw some horizontals. This is an horizontal level. Why is it an horizontal level? I'll tell you why. Because in the past, it reacted as support, rejection, support. So this level, it is not a level for you to ignore completely, right? So I said, okay, you know what? This level is, it's a strong key level. It's a major level. So when it's close to this level, I'll buy some, because you don't know what's going to happen, right? So you can buy some, and you're going to be a little bit smart and say, listen, I'm going to buy some, not a lot, just 20% of your wallet, of your investment, or long-term investment, yeah? Just put 20% there. If it wants to go up, no problem. When it's going to go up, come down to retest maybe that trend line, yeah, let's pretend that trend line continues, and then the price comes down, you're going to buy, goes up, comes down to retest it, and then it's going to come back to this trend line, then you can buy some more. And so, you know what, I'm increasing to my winnings, I'm adding up, and then you're going to be better, right? If it wants to go further down, that's all right. You bought some here, and then let's say that it came down to this level, bounce to this level, and then say, you know what, this is another key level. You can have another horizontal here. Let's put another horizontal here on these levels, and then you have another level there, and finally maybe you have another level there. So sorry, what did I do? I yeah, okay. Let's go back to Bitcoin. Thank you. Yeah, I press the spacebar and it goes to the next token of my list. So then you have another horizontal level. So here's your horizontals. So okay, if it's going to come here respecting my trend line, you're going to add more. If it's going to go further down and trying to test this horizontal, then you're going to buy more, right? So 20% the second level, 20% the second level, and maybe another 20% to the third level. And then when it's going to return, you're going to be in profit way sooner from this level, because every time you're going to DCA. And then if you're going to buy here, you're going to DCA to this. If you're going to buy more here, then you're going to bring your level to these areas. And when Bitcoin is going to turn around, you're going to be in profit from this level here. You started from here and you end up down here. So multiple things for you to do, short term, long term. It's up to you. But try not to panic, and you're going to be good. Right. I think enough of this explanation. How we do the calculation? Yeah, okay, I can do that. Good morning, a great thing I all do for the community. Yeah, well, this is community oriented. We're trying to help the community here, trying to understand a little bit the market and prepare, do a setup, see your things, something, a small thing for you to, find something, small trades for you to do and make some money until the big moment will come. I'll look for Solana for you. Let's have a look on Solana. Where's Solana? Solana. Here's Solana. Let's have a look. Let's go to the 4 hours, daily maybe. Alright. Okay. Let's clear a little bit of other explanations that I did the other day here. Right, that goes away. Let's clear a little bit. That goes away. Right. Okay, that goes away. That goes away. We'll do a TA from the beginning, right? So this is now the daily. Yeah, that's another explanation that I gave you in some point back. A different lesson. Let's clear this. Less noise. Okay, this is a daily now, right? And let's do some trend lines, right? Maybe around there, maybe around there. Now, trend lines. A lot of people are going to say, okay, how do you do trend lines? Do you do bodies? Do you do weeks? What are you doing? I do the average movement of the price action of the bodies, right? And I see it as an area, right? I'm trying to get the angles. I mean, if I have let's have a closer look. So let's go to 4 hours so we get more candles, right? So what I like to see is the direction, the angle of the candles, yeah, of the candles, of the body price action. So that's how I like to do trend lines. Let me clear these markings there. Doesn't want to go. That's interesting. Okay, that's better now. So again, trying to get the average of the movement of the direction, right? Now, if the trend line it's in such way and you get some wicks below it, it's fine by me, because I treat that not an absolute line, not an absolute level of prices. I just see it as an area, right? So wicks to me, to my mind, yeah, to my thesis when I do TA, it is okay because I do know it's a faker or liquidity grab, whatever it is, right? So this is like an average trend line with a lot of buffer. I use the up and down of this level as a buffer zone. Yeah, I'm not panicking and worrying about, oh, it touched my trend line or it went a little bit below. I don't really, waste my energy to that. So this is my average trend line. I said, okay, every time it comes close to this trend line, it's bouncing. That is a little bit acting as a support. Now what? The price is up here. Okay, what next? Another thing that you can do, trying to identify the waves. So okay, let me see which high should I be interested. And this is like down, up, down. This is roughly up, this is down, and this is up, and this is down. Okay, so you've got like two options. Now this is like a 4 hour, so this is way too back. I mean, this is all the way back in November, right? It's too far away. Let me get as a trend line the last wave, that wave. So okay, let me clear this noise here, and then I'll do a trend line from here. Where's my tool? Here it is, from there to there. Right, I said, okay, I'll grab the last line. I said, okay, this is my swing low, recent low, and this is my recent high. Okay, cool. So now, currently, I'm on a downtrend. Okay, can I see any major key levels? Yeah, major levels. Can you see something here? Yeah, what do you see here? Maybe an horizontal. So let's draw an horizontal line. Trying to get a line, an horizontal level in a place that makes sense, right? And what do you want to see? You want to see rejections as a resistance and rejections as a support. There's a support, that was a break, it came back, reclaimed it, support, resistance, came up again, support, resistance, support. So you see now an horizontal level that makes sense. You have, let's clear all this noise now, and then you say, you know what, I see this as an horizontal level. I've got multiple touches from the up and down, roughly up there. Make it a little bit thicker. You can give it another color if you want. You can use that as, I use a lot of templates, guys. So this is my support trend line, this is my resistance trend line, right, and this is my support. You can make it a little bit thicker, give it another color, play with your settings there. right? So now you have an uptrend, a downtrend, and horizontal level. So I say, okay, you know what? Solana now is approaching again a key level, right? Now you have two options. So, maybe it's going to act as a support. You don't know that, but it is good for you to know that you are in a key level. Let's bring the Fibonacci on the swing low and swing high and see where our golden zone is. Let's do a small investigation here. Is that okay? From here to there, and let me make it smaller. Let me close my extensions so we can be more focused and say, oh, you know what? That horizontal level, that major key level that we found earlier, it is in my golden zone. So, okay, now, it's getting stronger. It's getting stronger. So maybe you're going to see that it's going to react to this level, and then maybe it wants to go up. So that will be your entry, your buy zone, correct? Because you are within the golden zone. And why golden zones are powerful? Why do we say that golden zones are very powerful? This is a 618 level, right? Why is that? Because we do know that everybody that is going to draw that Fibonacci, right? Everybody's going to focus on the golden zone area, and they're going to be patient until and when the price is going to come to this golden zone. So this is a little nice, it is a nice little buy zone, right? That's what the OGs will think as well. And, maybe today, later on the live, if someone will bring up the Solana, they will say to you, we are sitting on the 618, which is the golden zone. And also we have a major support line. So maybe you have a smaller triangle. Yeah, that triangle. Maybe that will be a nice cheeky entry for you to come to the trend line, to the resistance. And if you're lucky, let's say Bitcoin behaves, maybe you're going to have a break, a retest, and then move to the side, to the upside. And that will give you a nice advantage because you entered at the key levels on the very support. Other people will enter here. So you're going to be in advantage of what? Let's say roughly 8%, 9%, 10%. You're going to be in advantage, right? Always make sure that you enter on the key support levels, right? And wait. What else I can say? Wait for the price. We're going to do a little bit another investigation here, right? What do you see? You see big wicks, right? You saw that big wick, and you saw that the price came down and filled that wick, and now you have another wick, right? You know that wick now is covered, it's filled. Now you have another little wick there. So most likely, when you got these imbalance, a lot of buying pressure. When the price came down here, liquidity stops, right? A lot of stop loss got hit on the way down, and that create an opposite reaction to the market. When all the stop loss is getting hit, it's like buying positions, right? If everyone was, getting stopped out on the way down, when the price was shorting and was hitting all the stop losses, it's like the opposite force is happening. When the price is shorting and then a lot of stop loss is getting triggered, that can give an impression of buying pressure, right? Another thing is that you have a lot of orders, buy orders here. So make sure that you pay a little bit to yourself, a little patience, and make sure that you have an entry as low as possible, close to these key levels, right? Don't rush to buy here. Wait for to go a little bit further down because you have some imbalance. So you know that maybe it's going to come down. Fill this balance as close as possible, and when it's going to come to this level, trying to enter. That will be a nice cheeky entry. And then see what's going to happen to these levels. Two things can happen. either it's going to break it and go up, or it's going to come back, right? And when you see a low and a low high, and then you're going to say, you question yourself, what I'm going to do? I'm going to take some profits. I'm going to close the trade, partially close the trade. It's up to you, right? Now, if you get a nice little entry here and you want to keep that entry, just don't close 100% of the trade. Just close partial of your trade. So you keep your entry a little bit alive, and then you can add on later on. It's up to you. Whatever makes sense to you and you feel comfortable doing. Now, if you want to say, listen, this is a very short-term trade, I'll trade from here to there, that will give me, well, ideally, it will give you around 16, let's say 15% round. Yeah, it will give you 15%. Now, if you do that 15% times 10, which is 10 extra leverage, right? That will give you 150%. It's not a very bad move. And say, listen, I'm very happy with 150%. No, it's 2.5 of your trade. Yeah, in profit, 2.5. So if you go full wallet entry here, and I'm going to show you the Excel now, it will give you a nice opportunity to explain the Excel. If you use the Excel as a calculator to see your risk, and you go full entry here and all the way up there, it can give you 15%. 10x will give you, 150% profit on your wallet. Right? Now, let's bring the Excel up and see how we use the calculator. What is an imbalance? Okay, we're going to explain about this. Now, have you all seen this before? Let me see people that haven't seen this before. I know some of you have before, so let's see someone that hasn't seen that before. Is anyone here that never saw this before? You have not. Okay, good. I haven't. Okay, we've got a few people. Right, this is my risk calculator, so to say. It's just a simple, basic Excel sheet. Okay. We're gonna explain this a little bit. Okay. So this is a little calculator, and the main calculator is this area here, right? This is an example of risk management tables and numbers, how much you should be risking, right? A lot of people, when they do risk management, say, yeah, 10% is okay. Well, this table here is to prove you otherwise, that 10% is too generous, right? And let's put here $1,000, for example, that your wallet currently is sitting at $1,000. This is how you started, with $1,000 on your wallet to do a little bit of trading. Now, if you risk 10% every time, after 10 losing trades, I take this example as 10 losing trades in a row, like 10 strike, right? It can happen, less likely. It doesn't happen so often, but it can happen. Maybe you had a bad day, you didn't see that it's a downtrend and you were betting for long, you didn't see it, you made the mistakes and you had 10 losing trades in a row. It can happen. Less likely, but it can happen. Now, if you do 10% risk, after 10 losing trades, you're going to lose total 70% of your wallet. That means you gave away $686 away to the market. And after 10 losing trades and you lost almost 70% of your wallet, it's going to be very tough on you with remaining $300 to recover and break even. You need a lot of pressure to recover. That means if you go down, did I make that Excel file? Okay, the other day I was doing another file. Let me search if it's not finished. Maybe I think it's not finished. Let me have a look very quickly on my browsers, guys. Give me 1 second and see if you have done the Excel sheet about how much do you need to recover, because I did one. I'm not sure if I finished it. Let me have a look. Yeah, okay, almost there. I'll bring that because it is a very good example for you to understand. It's here. Now this Excel here, why it is important for you to understand is that when you lose up to 5%, roughly it's the same amount that you need to break even. So if you go down by 1%, let me increase that for you to be able to see it. Is that 150? That's the maximum I can go. 200. Okay, here it is. You can all see this, yes? Right. So if you go down by 1%, you need 1.01 to recover. If you go down by 2%, you need just a little bit more than 2%. If you go down by 10%, then the next time you need 11.11 to break even, to go back where you should be. Now, if you go down by 15%, you need 17, and so on. If you go down by 60% down or 70% down, for you to go back break even, you need 233% in profit. So that table here, it will give you an explanation that when you're going to lose 70% of your wallet, you need 233% to recover, right? And if you go even lower, let me bring my other table. If you go even lower, like 80%, which is only 10% difference, from 70 to 80 is only 10% difference. But for you to recover and come back break even, you need this time 400% to the upside. Right, and if you go down by 90%, you need 900% up move in percentage for you to break even, not to become profit. So the deeper the loss you're having, the harder you need to work on your way up. So that's why risk management is very important. That means you need to 2x your account. Yes, this is like 50%, you're going down, 100% up, that is, you need to 2x, right? 3x, 5x, 10x. So if you're having, let's say, 10 losing trades, by having 10% as risk management as your risk factor, then you go down hard. After 10 losing trades, you're going down by 70%. 5% is a little bit better. After 10 losing trades, you're only losing 43%, less than half. So if I lose 43%, almost 40%, let's bring to the other table, you see that you only need 60% to recover instead of 233. Major difference. Instead of you need more than 3 times of your capital, now 1.6, 1.5 is going to be close enough for you to break even. Much easier. Less stress to yourself on your trades and less stress on your psychology, right? So if you use 2%, after 10 losing trades, you're going to be down by 20%, and 1% is going to go down by 10%. So this is an example for you to understand where are you going to be after 10 losing trades. Now, if you understand this table, then you're going to change your thesis and say, okay, now that I understand that, maybe I should be focusing between 1 and 2 and 3, maybe, yes, and 5 is very generous. You can do that for 1 trade and say, listen, only once I can risk 5%. The rest of the time, I'm going to risk 1 or 2%. the bigger the wallet you have in the future. Let's say that you're getting better and better, and your wallet is increasing. You're gonna find yourself that you're gonna have the need. You're gonna see yourself that you need to risk less. So in the future, maybe you're gonna risk 1% only, and maybe you're gonna go down to 0.5%. Right? So this is the risk management table. Now, how are we going to apply this now in practice? How are you going to do this? Well, in the old days, and maybe some of you are going to do the same thing. Let's say that we are in Solana now and we are interested to buy. Right? And say, you know what? You are in my golden zone. We are just above the support line. I'm interested to buy. So I bring my long tool. Now, this is a theoretical practice here. And that will be my entry, and my stop loss is going to be there, and my target is going to be my previous highs. A small trade, short-term trade. I don't want to go crazy. I don't know if it's going to reach all the way up there. At least let me reach the previous levels. I have evidence that, you've been here before. So I said, okay. Now, a lot of people will say, I used to do the same mistake when I was younger. I said, okay, how much do I need to trade now? How much do I need to risk? 5%, 2%, 1%? I don't know, maybe 5%. Okay, 5% means that you're risking $50. So a lot of people, including myself, I said, okay, my entry is at $50, right? That's the one I want to risk. $50 is my entry. So your entry here is $50, right? Okay. Now, if that plays out well, how much is my profit? My profit is sitting at 6.5 roughly. So my profit is looking at 6.5, right? Now, what will be my leverage? We do know from school that we say don't go over 10. So maybe you feel a good, that setup makes you feel very good. So you go 10x, right? So you go with $50. That means your size is increased to $500 because you use leverage, right? So you know that you have a 6.5% move to the up, right? So how much will be my profit? Well, if you keep that as $50 as your entry and you multiply the leverage with your profit, that's one way of measuring it. That is 65% profit to $50, right? And you say, hooray, 65% profit. Now, what is 65? $32.5. I did my math in Greek. Sorry about my Greek. So that was roughly $32 in profit. That is my 65%, right? And I was like, okay. It's going to take me a very long time for me to build up my my wallet, because my wallet now is sitting at 1,000. Remember, my wallet was 1,000. I said I'm going to risk only $50, which is 5%. And then after that, I gained $32. So now my new wallet will be sitting $1,032, right? And you're going to say, oh my God. I mean, $32 is not a bad trade. It's not a bad profit. It's good profit, don't take me wrong. But it's going to take you ages for you to double your account, right? And I needed to come here now with a solution. I said, come on guys, it's going to take me too long for me to build my wallet. So I need to find another solution. I said, okay, how much is my risk? $50. Okay. Instead of me thinking that my entry is at $50, what if I'll start thinking and say that my risk is going to be minus $50, right? So that means if the price is going to come down and hit my stop loss, that will be equal to $50, which is equal, let me bring my Excel, that will be equal to my 5% risk, right? I was like, okay, now if that is $50, what is my entry? Well, your entry this time is going to be $1,000. So your entry is full wallet, $1,000 you go in. If it goes against you, you're going to only lose $50, which is your 5% risk, right? A very, very generous 5%. Okay, now I know that my profit is sitting at 6.5, right? I'll come to you later how to calculate your leverage. But let's say when and if they say that you use 10x, right? That will be against 65%. Well, 65% of what? Of the $1,000. And that will be what? 65% on 1,000. What is $650 in profit? $32 on my newbie kind of entry of my trades, or $650 on my second thesis, or my second, let's say, upgraded way of me entering the trade. I'm still risking 5%, right? And I'm gaining 6.5. If I use 10x leverage, that is $650 in profit. And now you're going to say, wow, almost with one trade, almost, I was very close, double my account. Maybe on the second trade, I'll double my account. So 2 trades away, you can double your account. You can make your $1,000 to $2,000 with 2 trades. Now you're going to say to me, come on, Thales, you're very optimistic. Okay, that's no problem. Let's tune it even further, right? And let's make it, make this thing work for you. Now, how do you use this size? This side of the Excel, the calculator. This is the good stuff. Now, that box here, the total trade capital, automatically updates it from this cell. So if I type here 500, which is my wallet, everything will automatically calculate it, right? So if I have 1,000, everything changed back. Now, what is my max capital risk? Well, on the example, on the TA that we did, we said 5%. So I put here 5%, right? Now, when I go back to my TA, I need to see how much on that, let's say on that entry here, and that is my stop loss. I need to see what is my percentage on my stop loss. And the stop loss right now currently is sitting at 1%. That means your stop loss is sitting 1% away from your entry. Okay, so far so good, 1%. Go back to your calculator and say my stop loss on my TA is currently at 1%. And automatically the Excel will give you that, you know what, you can have a trading size, a position size equal to 5,000. You only have 1,000, but you could, with your TA, like you're risking only 5%, your TA gave you 1% as your stop loss. You can go all the way to 5,000 as trading size, your position size. You're only risking $50. 5% to 1,000 equals to $50, right? So my TA is sitting, my SL is sitting at 1%. So I need to make sure that 1% is equal to $50. So the calculator will give me maximum safe leverage 5. And that will make sense. If I have $1,000 times 5 will give me $5,000 as trading size, right? So if I calculate 5 times 1, which is my stop loss on my TA, on my trading view, if I times that 5, that will give me my capital risk 5. So now you can understand the math behind it. It makes sense. So that 1% will be equal to 5%. So that will be my leverage set to 5x. That's it. Right? So, okay, sorry about that, guys. Someone's calling me. So this is 5x, guys. So what is my profit? Where is my profit looking at 6%? You can make 6%, it's alright. What's my ratio? 6:1. Lovely. So 6% is my profit times 5 because of my leverage. That will be equal to 30% of profit. So if price wants to come up and take my profit, then right, you're looking at $300 profit. Either you're going to win $300 or you're going to lose $50. In that way, apply the calculator this way and do your TA this way with your leverage. You see, you don't go crazy with leverage. You do 5x, which is safe. You know that if it's going to go against you, you only lose 5% of your wallet. Very generous 5%. I make sure you understand this. It's a very generous 5%. That will give you $300. One trade can give you 30% gains on your wallet. Now that is like makes sense and is worth it. And then 3 trades later, 4 trades later, you double your account. Less work. And that is equals to less risk. Why? Because you trade less. Another point that I would like for you to understand. Make sure you understand. Seriously now, this is a very friendly advice to you. Make sure that you understand that you need to be in the market as less as possible. I hope that makes sense. I beg your pardon for my English. It's not my first language. Make sure that you trade as less as possible. Spend as less time as possible in the market. Make sure that you're in and out. Or when you are in, make sure that it's worth it. Go for the money, like 3%. Right? Go for that 30%. Right? Now, let's say that you want to risk less. Let's go back to Excel. Let's say that we want to risk less. So at least I don't want to risk 5%. I don't want to be that generous, right? I want to risk less. I usually, my thesis is like let's say my 80% of my trades are sitting at 2% risk. Now, if I do 2% risk and my ISO is sitting at 1%, the calculator will say, you know what? This time you go 2%. Okay, no problem. I go 2%. I risk less. Now, this is 2x, right? Again, 1,000 is your entry, your full wallet. You're going to lose $20 this time. Remember, your risk is sitting at $20. So if I'm going to lose less this time, Thales. I'm going to lose $20. And 6% times 2 is 12%. That means I'll win $120. Right? You risk less, smaller leverage, you pay less fees as well. Right? Because you borrow less money. You go full wallet, you take advantage of the size of your wallet, 100% of your wallet. You go in full 100%. Right? And you gain $120. One trade. And you make $120. And you made 12% of your capital. Right? Less riskier because you're losing less money. It's fine. I'd rather lose less. I don't have the mentality, the mindset that I will become a millionaire with one trade. No way. Right? That's it. we're just a little bit above 1 hour. I'm going to keep these AMAs close to an hour, guys. I'm not going to do the 5 hours and 6 hours again. It's too tiring for you guys. I don't want to bore you. I just want to give you my alpha, my thesis, my tools, right? On Monday, I'm going to show you how to do a very short trades in a boring market, right? Is there a way to see it from the beginning? Yes, I record these sessions and it's going to be on YouTube. And now that you mention it, for the new guys, I'll give you my playlist link on YouTube, which is hidden. It's a playlist that is hidden. Only when you have this link, you'll be able to access the hidden playlist on YouTube. And this is where I place all the recordings, right? So since this summer, I decided to record my sessions for the people that they want to re-see it because they didn't understand it at first. So here's a link for you to go to YouTube, and that's where I'm gonna put stuff up there. Right. What else? You have the calculator. That's good. I gave you a little bit the insight. Well, on Monday, what I'm gonna show you a little bit. Let's give you a small example here on Musk. What I usually do on a boring market is I'll try to trade the waves, right? And I'll give you a very insight, or like a small teaser, what's going to happen on Monday. I'm going to show you how to trade from here to there, from there to there, and from there to there, right? Little waves, ride the waves. It's like sideways. It's like in a range. We are in the box. Nothing major happening, right? But even in these kind of boring situations in the market, you can still trade directions, the waves, right? And I'll teach you that. Well, I'm not going to teach you. I'm going to show you what I'm doing on the boring days, on a smaller time frame, very small time frame, right? Until then, I'll let you be a little bit practicing on the weekend. It's Friday today. Do expect some funny movements. You know what's going to happen on the weekends, right? Have your thesis in play. Remember that you have, let's put a little two trend lines there. You have this bottom, and then you have this top. So Bitcoin is like in a range. Now and then, we'll do the fake outs, right? Grab some liquidity. Now it came back to the box again, right? And you wait. Either way, it's going to break from the top or it's going to break from the bottom. My personal, let's call it a feeling that I have in general is that Bitcoin, I think it needs to recover, right? The retracement from the 15K region, right? This is a 15K, this is December. All the way up to now, I think it wants to come down and retrace the gold zone, right? Maybe. This is what I think. And then we'll come up and go. This is my general feeling, right? I cannot predict. I'm always going to react. So I'm watching what Bitcoin is doing. It's a weekend. A lot of people don't trade on the weekend, which is not bad. Yeah, it's not a bad idea. Other people will have some little fun. So just draw the little box and see which side is going to break that box of yours. I have a little box that's called range. This is my range, right? And let's pull. So this is your range box. Just wait what Bitcoin is going to do for the outs. Now, if you do outs like Solana, you know that you are in the buy zone, and if Bitcoin behaves, maybe Solana would like to leave from here and go all the way up to the resistance, and maybe it wants to come down again, maybe, right? It's again what Bitcoin is going to do. If Bitcoin is going to drop a little bit, maybe you're going to come down to this support and resistance level, and then maybe you're going to turn around to the upside. And then Monday, maybe we're going to find ourselves on Monday being up here, and then you're going to be questioning yourself, are you going to break the trend line when the market's going to open? Maybe. Or it's going to come down again. So you have your thesis, right? Trying to enter as low as possible. Remember, where other people placing the stop losses, you make sure that you can try and give a try to have your entries at these levels, right? And that's it. I mean, that's what you're gonna do. Okay, guys. Right. I'm gonna stop here. We've been over an hour. I'm gonna wish you a very happy weekend. I wish you all the best. Trade very safely. Do your risk management. Keep your calculator in place, and trade safely. Do small trades and make some money if you can. If not, play a little bit safely. Wait for the right conditions, which is like the break of the trend line or break of the support or something, and retest. Right? So that's from me. Have a very nice, good weekend. Enjoy yourselves, enjoy your family and the people that you love. And I'll see you back on Monday. And that is gonna be uploaded on YouTube, and it's gonna be ready in a couple hours, right? Because it's gonna be ready sooner. Okay, guys. I'll see you back on Monday. Take care. Have fun.